One. All right, welcome back, everybody, to the Discovering Multifamily podcast. I'm your host, Anthony Scandariato, and today we have a very special guest, a friend of mine, and he is one of the top investment sales brokers at Marcus Millichap, who focuses on multifamily and mixed use in northern New Jersey, particularly. And Dan Aviles, welcome to the show. Appreciate having you here.
Awesome. Thanks for inviting me.
Awesome. So for this show, we want to kind of talk about we're recording this right now in the midst of COVID-19 and hopefully towards the middle to tail end of it. I think we're recording this at the end of April. So we wanted to get Dan's fresh take on, not only the, northern New Jersey market, but just in general, what kind of opportunities he's seeing are going to come online, and what has he seen that transpired pre-COVID-19 to post-COVID-19, still take place. So we really want to get into the nitty-gritty here with Dan, and he's a great guest to have for this type of conversation. So I guess we'll get started. So if you want to just give our audience a quick background, and hopefully I hit the nail on the head there.
Yeah, no, awesome. Yeah, so, my team and I, we specialize in multifamily sales in northern New Jersey with specific focuses on Bergen, Passaic, and Hudson counties. Since this outbreak necessarily has been impacting our specific market, we've been tracking a lot of the data. We've gone back about 15 years in transactional data to kind of see how the market last responded to a big economic, I hate to use the word collapse, but downturn, right? And so we've been looking at that. We spent a lot of time in the last 4 weeks on the phones with hundreds of owners in these markets, covering probably a little over 15,000 units. So we've been tracking collection data on the rent, what they've been doing, what they've been seeing. Personally for myself, my team, we had listed and under contract about $50 million worth of deals towards the end of February. So we're in the middle of it, just like you, just like a lot of people watching this, where, you were in some part of a deal, either just starting or maybe days away from the closing table, right? And, things definitely changed, and, we're starting to see people get creative and evolve in their thinking of how they can still have a meeting of the minds. And it's taking a lot of teamwork, brokers, principals, lenders, title, third party, all of that, right? So it's been a very interesting time the last, was it now about 5 weeks since really you've seen things shut down. So, I would say, for anyone listening to the podcast or watching this, it's my general consensus is that most people are starting to see the light at the end of the tunnel, right? We're starting to see that, it was serious. It is serious. We can work around it, but ultimately, things are going to get better. Things will move on, right? Deals will still happen. People will still need to go back to work. People will need to go back to their lives. And so the one consistent thing I've noticed the last week or two from people in the business is that, this idea that, okay, we're going to come through this somehow, some way. Let's hunker down. Let's put our heads together. Let's start figuring out and put things into place so that when we come out of this, we're in a better position, right? So I'm sure for you as an investor, you're looking at that way. For yourself, for your LPs, for myself as a broker, I'm looking at for myself, for my clients, how can we all be in a better position next time? And I would say more importantly, how can we be in a better position maybe the next time this happens, right? That's the other thing that I think people have to take into consideration is, where were you when this started? And what are you doing right now to make sure that you don't find yourself possibly in a distressed situation if something like this should happen again? So
now, I know the markets that you focus on are very urban centric in northern New Jersey. You mentioned Hudson County specifically, and part of kind of my investment thesis, but this is just me because I usually am trying to meet certain returns for myself and my LPs. A lot of those Hudson County acquisitions, at least for Class B, Class C multifamily, have it's been very heated over the past few years in this cycle. So, do you think that there's going to be a lot more opportunities close to New York City, in those counties that are going to start popping up that are kind of in more of a distressed situation rather than some of the, suburban locations where bases are like, four times less than what you
Yeah.
buy in Hudson County? And, or do you think it's really operator specific? So the operators who weren't cash heavy, are going to get, really hurt when, it's time to make their payments. But, we're recording this at the end of April. And I know for my company specifically, April's collections were very strong. I mean, they're almost 100%. So
Wow, great.
we don't know what May is going to bring.
Right.
Now, I don't know if that's the case for those high cost markets. So for my listeners, my average rent across my portfolio is probably $1,100. So
Okay.
in those markets, Hudson County, Passaic County, they're probably on average 1,700, 1,800, maybe $2,000. So I guess just trying to hear your perspective on, if you think that owners are gonna, or we're prepared for this, and if not, are we going to start seeing some price adjustments? Because frankly, I haven't seen it yet, but it's also there hasn't been much movement in the month of
Right.
April.
Right. Yeah. So I think, it's not only market specific, it's sub market specific, right? So without question, I think everyone here, that maybe what your tenant base is or certain markets. I think if you have a C or B property and you haven't been able to successfully work it for the last couple of years, maybe the way you thought or you projected and you still have tenants who are at risk, that could be, there could be two things here at play. You could find yourself with a tenant base that's at risk for unemployment, or you may still have a tenant that's paying $1,000 for a 2-bedroom somewhere in Jersey City or West New York or Union City, right? So it's definitely something that we're looking for, and I would say that the rent collections along those lines were relatively strong in April compared, right? I'll give you an example of Paterson, New Jersey, right, which has seen a huge surge in investor money, outside capital come in the last 4 years, but heavily the last 2 to 3 years. And they were, we talked to about a little over 100 landlords in Paterson in the last 2 weeks, and they were hovering right around a 75% collection rate, which compared to national numbers, your numbers, Bergen County numbers, Morris County, much lower, right? But when we actually go back and we spoke to those landlords again and said, well, how does this compare to March, February, January? Go back and you realize that the average landlord's actually probably collecting maybe 80% to 83% in the first 2 weeks anyway. And they have the same people who are always late and have to play catch up. So, I think that's a story that might be playing out across the board a lot in April. What I would say about May and those particular, again, those markets where, the rents are higher, you're seeing the rents go higher, but you still probably have a lot of tenants paying lower rents because they're rent controlled. It's been hard to get their rents up to market. I am curious to see, and I do think that the unemployment program that's now in place, that's offering an extra $600 on top of what you normally would get. That's a huge number. I mean, I think you'd have to make something like, if you made less than $52 or $53,000 and you qualified for unemployment in the state of New Jersey, you can essentially get back what you were making, if not a little more, right? So I do think, as you said, those particular counties where you've seen the run up in rent, I do think they're at risk. Their tenants are at risk for a deeper impact right now in the economy. But I do think that there are, programs that should help them be able to cover something in their rent. And so I think that's something to consider. I also think it's for price adjustment. Haven't seen it yet, and that's just because I think everyone's still trying to figure out what's going on right now. So what we are seeing is maybe people get creative. We're hearing more seller financing. We're talking a lot more to people about seller financing. We're seeing people, if you had a deal that was under contract and we're trying to, close a deal, and the buyer's getting cold feet trying to maybe adjust the price, where we've negotiated the seller to leave some money in escrow that the buyer can then close and draw down from, whatever the difference is between the rent collected and the rent that was, expected going in. So, I'm not seeing price adjustments yet across the board. You're hearing of some retrades here and there, but very deal specific. And overall, I think ultimately, and as you know, the lending market is probably going to dictate where cap rates go. Ultimately, I think long term, we're still going to be in a low interest rate environment. I don't think that's going anywhere. We saw an increase in here recently in rates, and that's kind of threw a lot of deals out of whack. But as those rates settle, the cap rates will settle, right? So maybe, I don't know, from where I'm standing, or sitting, I only see, maybe a quarter point right now is where we're kind of looking to half, if that's something where we might settle. Again, I think rates are going to be very specific on that, because ultimately, I do think that there is enough dry powder out there that's looking to jump in and take advantage, even on those small little price adjustments.
Got it. And it was a good segue into my next question for you. So, from a lending perspective, you mentioned as long as rates stay low, cap rates will not really expand too much. Do you think that's more New Jersey specific, or do you think that other markets and are going to be hit worse with cap rate expansion, regardless of where rates are, just because of in light of what was happening?
Right. Great question. So I absolutely think that northern New Jersey, being, we're New York centric, right? And I think that if you look at the industries that have been hit the hardest in this, that's ultimately going to determine, I think, where, whatever the recovery is and where the price adjustments are, and the values of those properties. I think northern New Jersey, again, being New York centric, there's a lot of jobs there. There are a lot of jobs that, can be performed from home. There's a lot of what we call super commuters who are, travel almost 90 minutes to get to where they have to be. There's a lot of suburban office in northern New Jersey that has had a little bit of a renaissance the last few years, from investors looking to capitalize on cap rates and see potential there for people who are, companies looking to get out of the city, maybe come to some place a little quieter, a little bit more, family friendly, whatever, what have you. So I think northern New Jersey is still poised for strong appreciation. There's still an incredible housing shortage, affordable housing shortage in this country overall, but particularly in northern New Jersey. I saw a very interesting statistic where since 2013, the number of units that are being built requiring an income of greater than $100,000 a year, I think since 13 is about 83%. And of the units right now that are being built, right now that are under construction, it's closer to 90%, right? So overall, a lot of this new construction you're seeing being built, it's not for people making, the average income, right? It's just not. So I think because of the lack of supply, the proximity to New York City, we are still in a very strong market when it comes to appreciation. And quite frankly, look, there's scarcity, right? In not just for renters, but for investors. So when it comes to pricing and an opportunity, I still think Northern New Jersey is poised for a quick bounce back and future growth.
And to kind of piggyback off of that a little bit more, do you think that competition on deals is going to be as fierce as it was prior to going into this in Northern New Jersey?
So I do think that there is going to be strong competition, and I think something a lot of people who are active right now looking to buy. Maybe they've been sitting on the sidelines. They didn't like where the returns had been for the last few years. Um, I think that they're looking to jump back in, and so I think they're regardless of where lending is, and hopefully it will start to loosen up here. Um, Cash will be king. I think investors who have cash, who are liquid, and can produce strong terms are going to go to the front of the line, right? So let's say 6-7 weeks ago we were still successfully negotiating hard contracts, due diligence up front, no mortgage contingency, and we're still achieving those terms. Moving forward, there may not be as many investors who are willing to do that, right? Maybe not be as many investors willing to kind of push themselves into that uncomfortable zone. But just the same, sellers are going to want some kind of reassurance. Sellers are going to want to know that you can perform, right? So I think having liquidity, having a history of closing, good relationship with your broker, with the lender, if you're using one, low leverage, things like that. We're going to see sellers be a little bit more particular, I believe, about what they're going to expect from buyers. So that's where I think the competition is going to maybe heat up, so to speak. You're going to have to really separate yourself still, not just in terms of doing due diligence faster. That's all still negotiation, but really presenting yourself, right, and being able to show that you can get this thing closed even in this climate, or hopefully this a post-COVID climate.
No, it's really great insight. Really great. So looks like we're gonna wrap this up because you answered most of my questions. We do a quick fire round at the end of every podcast with just 3 quick questions. So the first one being, do you have a favorite real estate or business book?
Yes, I do actually. I happen to love Gary Keller's book, Millionaire Real Estate Agent, all of those books that he wrote, Millionaire Investor. Shift is a great one that deals with, a shift in the market. I'm a big fan of all those books.
Nice. And outside of real estate and investment sales, what do your hobbies look like?
Oh man, I'm I'm getting into I love cooking, and certainly being under quarantine has helped enhance some cooking, baking in particular, baking skills. Not so good for the waistline, but getting pretty good at that. I'm a big fan of cooking, so that's one thing I've been doing a lot.
That's awesome. Yeah, it's amazing when you stay at home for a while and you're not going out to restaurants every other day or ordering in. It's amazing. And then lastly, do you have a role model?
Wow. Man, that's a deep one, Anthony. You're throwing out there on the real estate podcast. I like that. Um, it's tough. For me, the most recent role model I've had, it's not so much like a Zig Ziglar or Grant Cardone or anything like that. Although I do follow a lot of those guys. Actually lately for me, it's become my father-in-law has been a huge role model for me. He kind of grew up in Brooklyn, self-made, went to go work on Wall Street, made something of himself, took care of his family. And, I've, he's been through probably, 7 or 8 different ups and downs. And so, I've, leaned on him heavily during this time to kind of pick his brain about how to, stay level-headed and even here through this. So he's been a real big role model for me for the last about 15 years.
Awesome. And how could people find you, Dan?
Yes. You can, easiest way is just Google me, Daniel Aviles, Marcus Millichap. You can find me on LinkedIn. Trying to get more active there, definitely engaging with people. Aviles groups on Instagram, and you can find me on Facebook.
Awesome. And we'll be posting links to all of that in the podcast description. So you'll be able to reach Dan, and you can also reach out to me if you want to reach Dan. So great. Well, Dan, thank you so much for coming on the podcast. I really appreciate it, and hope to see you again after all this is done.
Yeah, man. I'm looking forward to finally getting some more face-to-face time after we're allowed to. So stay safe.
Excellent. Thanks again. You too.
All right.